Okay, let's get started. I am Kathy Dillon from Boost Business Services, and this is our Tuesday Talks. This week, we're talking about the income statement. Not exactly exciting for everybody, but it's very important, I think, that we have an understanding of the income statement and our financial statements. It's not just about selling the product and whatnot. It's really about the whole picture of your financial of your business. And so that's what I'm going to talk about today. Okay, so the income statement is basically the income statement shows your company's financial performance over a set period of time. So it could be a month, could be a year, could be a quarter, whatever. So it measures your sales performance, which is your revenue, up against your operational efficiency, which is your expenses. And it kind of answers the question, how did we do during whatever period we're talking about, right? So that's what that does. And there's a formula for it. I'm going to share my screen and show you that formula. It's pretty simple at its basic level, but it's very important to know. Hopefully you're seeing that soon. Okay, so if you see that, what you'll see is revenue less cost of goods sold, less operating expenses get you net income. Not very exciting for sure. Not very exciting, but it is important. So what do we call revenue? So revenue is how much money you make before you take out any expenses whatsoever. It's the total top dollar of what you've sold, basically. And it can be from many different places. So for example, it can be from your website sales, if you have an Etsy account, if you have in-person events that you might go to, if you have affiliate income, or even teaching that you might do. I do a little teaching here on the side. So those are the things that you could, that qualify as revenue. And typically on an income statement, we want to separate those out so that we know how well we're doing and how profitable we are by what we call revenue stream. That's a revenue stream: teaching, website, Etsy, whatever. And you define your revenue streams however you want to. So that's how we handle that. So cost of goods sold. So cost of goods sold is the cost to produce or procure, which means buy, your products or services. So if you are producing skeins of yarn, or let's call it that. So we need the dye, we need the raw materials for all that, and we put it all together. That's your cost of goods sold. So that would be cost of goods sold when it comes to a product. Cost of goods sold when it comes to a service that you do, like teaching, is a little more, there's not quite as much to it, because it really would have to do with, there's not a physical good involved, it's your time. So that would be a little bit less clear, but it would be, there would still likely be a cost of goods sold in there somewhere if you had materials, books, and that kind of thing that you were selling as part of that. So again, cost of goods sold is your raw materials, which fiber, dyes, that kind of thing. Direct labor could be any resale products that you buy, and also any packaging. So those are kind of some examples of what cost of goods sold are. And then there's operating expenses, and operating expenses are actually just the general expenses of a company's business, to run a company's business. And by that, I mean any cost that you have that is not directly associated with a specific product. So you do marketing for your entire company. So even though that furthers your sales, marketing helps your sales, it does not relate to the production of a specific product or the procurement or purchasing a specific product. So we're talking about administrative salaries, we're talking about advertising and marketing, any product research, depreciation if you have goods that are depreciated, website hosting, bank charges, rent, all kinds of things, legal and professional services. If you got a bookkeeper, that would come under the general administrative expenses, operating expenses. So when you subtract from revenue, when you subtract cost of goods sold and operating expenses, you get net income, which is basically the bottom line. That's after everything is withdrawn from, is subtracted from your revenue, how much money did we make? And hopefully it's a positive number. And that's what we're always striving for, is a big positive number at the bottom. So that is what sort of the basics of an income statement. And just to give you a general understanding of an income statement. Stop sharing there. So I wanted to see, are there any questions by any chance? Any comments at the moment? Okay. So now, just our next topic is on my website, I have a series of free articles. This one is called Income Statements, and they're workbooks that you can download for free. And they have basically more information from my Tuesday talks. There's one document to accompany every Tuesday talk, and also some worksheets. So, for example, in this downloadable document, we have an income statement worksheet. So you can use that to try to pull together your an income statement for yourself. If you've never done it before, you can do it on paper and see if you can get a good idea of where you're at. So yeah. So I'm Kathy Dillon, and I'm from Boost Business Services. We are doing Tuesday talks every week. Next week, we're going to talk about something even more dull, which is the balance sheet, but is equally as important. After that, we had a request for depreciation and cost of goods sold. So those will be the next few weeks. And I would love to hear what you would like to talk about. You can comment in the put a comment in the chat, or you can send me an email directly or post onto my Facebook page. That would be great. And I look forward to hearing from you. Thank you very much. Bye-bye.